How's it going, everyone? I hope you guys are doing well. I just want to discuss, a really nice 15-minute strategy that I really think everyone should do. And I'm going to go over this. This is raw data. This is October 19th. When I traded this market on, October 18th, the wins and losses were absolutely amazing. And I'm going to show you completely how I do this. I actually love doing this with futures. You can do this with options too. And I made it so simple where all you need is a 15-minute chart, which is what I'm looking at right now, and the EMA 5, 10, and 20. That's all you need. And literally, if you follow this to a T with proper risk management, you're going to be totally fine. And so here's the basic analysis of this. I'm not going to make this too long. I think everything you should keep trading simple, stupid. There shouldn't be like some formulas and just some crazy thing you have to draw and understand all these kind of weird patterns. Just do something that's simple. If it works over the test of time, that's all that matters. So as you can see on the 15-minute chart, I did another video about the trend strategy. I think that's a really nice one too. But as you can see, you can kind of see the trend, right? Just by looking at it. If the candles are going up and they're above the EMA 20 and you see the EMAs, like there's a lot of distance between them, the trend's up. It's very obvious. And if you see right in here, if all the EMAs are close together, then it's a choppy trend. Or it's just choppy. But this is how I played it. Even with this chop mess, you can make really good money. So right here, we had this big candle down, right? You can see this big wick, and it went back up. But usually what happens is there's going to be inflection points. Like right in here, this EMA 10 is the highest on this. So that's going to be your rejection point. And so we went from a low of, like from 582 all the way to 583.94, almost, 584. And then why did we reject on this candle? We went all the way down is because of the EMAs acting as rejection here. So when you're below the trend, below the EMA 20, you're more in a downtrend. So on this 15-minute candle, just retesting here, I made massive money. And I literally kept rinsing and repeating this. I'm like, holy crap. And I did this a couple of times. So I want to release this video on something that is so simple and so stupid. It's like so easy to do. 15-minute chart, EMA 5, 10, and 20. As you can see, the EMA 10 was the highest one on this. So we got this big rejection, right? And I played it right here on this EMA 10, and it went down. And then guess what? I played it again at this low here. It went all the way back up. I played it again, and it went down. I didn't play this one because it's only 10. I want to play the highest one here. It went up here, and it went down. And you can see the multiple times you can play it, like one time, two, actually this candle too. 1, 2, 3, 4, 5, 5 wins, and then you finally get a loss right here. Now let me show you guys the most important thing. That is your risk versus reward and your stop loss. That is the most important thing because you never want one loss to outweigh like more than 2 wins. Never. So what I do, and you guys can adjust this as you want, but the risk versus reward should always be a 1-for-1. So if you're trying to make $100, then you need to max risk $100. All right, that needs to be your max. And how I look at it, if you're doing options, let's say you have $1,000, or let's even say 500. Your max loss is 20%. So that should be there, but your max, your win rate also has to be 20% win. So in that scenario here, when you would have bought it up here, we are or right here, we'll say, and then it coming down. So it comes up, your max lot, your risk versus reward. If it starts coming above here and stays, then then you need to take a loss, or 20%. For futures, it's a little easier. How I do it, I put my risk versus reward, and it's super easy. I put a bracket order. I think some people say you can do it on options too. But so basically for this order right here, I would have got in right here. My max loss, this one actually barely missed it, would be right up in here, and then my take profit was here. I like to do a 1-for-1. So if I want to make $200, if my $200 is my stop, and you can kind of see where your stop loss is, it'll show you here, then I want to make sure I at least make 200 profit. So I won about 4 or 5 times in this channel. This right here was a loss. As you can see, We went way above here, and we're coming above the EMA 20. But then I'm like, okay, change the strategy. We are above the EMA 20. We are in an uptrend. It's totally fine to have a loss. Totally fine. So as you come back down, what? You hit this EMA 20 here. Look at this. To a T, it's okay if it penetrates it. You're going to see that a lot. And then we bounce up, right? We start bouncing up right up in here. And look at this massive win you could have made. This was absolutely beautiful coming up in here. So also, another beautiful thing right here, this one might have stopped you out. It would have been really close, but as you can see, the uptrend still holds. As long as you're above the EMA 20, it holds. Right in here, as you can see, we go up right in here. This one would have been a little dicey, but let's just go through another day. That's how I played that day. I won like 10. I got like 10 wins that row day, and I lost maybe 2. But remember, my risk versus reward is at least 1-to-1. So, only, if I lose 2 times, that only cancels out 2 of my wins. Totally fine with it. All right, here's the 15-minute chart. As you can see, the candle goes below the EMA 20. Right in here, we're definitely below it. You can see we start going down. And even the body closes below it. As you can see, the body closes below it, the 584s. You can look at the close of this candle is at 584.74. So, like right in here is this closest end of the body. So this is definitely red. We're below the EMA 20. So what happens is, same scenario. We touch this upper EMA, which is your EMA 10, and what happens is we go tumbling down. We go back again, and we try to touch it. We come tumbling down. And then it works like a charm. So you have 1 win here, 2 win here, and then look what happens here, though. It comes up here, wants to touch the 20, and then it breaks through here. This would have been your loss. So you're up 1 on the day, though. But as you can see here, on this candle here, you touch this, and you come back up in here. So you would have got a win here. This one would have been a little dicey if you got in again, but on this candle here, you would have had a win. But as you can see all throughout here, you would have won on this candle, you would have won on this candle you would have won, and then this candle. You could have kept rinsing and repeating it. This would have easily gave you that, for options, 10 to 20% easily. In futures, you would have made money too. But then this is why it's so important to have your stop loss automatic. Because as you can see, this is considered chop, right? This is chop. Nobody knows exactly where it's going to go. My guess would be up since we're above the EMA 20, but then it comes tumbling down. Totally fine, right? But as you can see right in here, how the EMAs are respected, hits this, comes, makes a new low. Let's look at another day. That day you would have won, not as much, but you would have definitely won on that day. Here we go. Another example. I'm using SPY. This works for, I like to do the indexes. It works for anything though. Anything, no matter what it is, it definitely works for anything. Stocks, you name it. So as you can see on SPY, we come tumbling down here. We're below the EMA 20. You would have had a loss right off the bat on this one, unfortunately. And that's going to happen. That's totally fine. No system is perfect. That's fine. So right in here, you would have got stopped out. If you're doing options, I recommend 20% stop loss. If you're doing futures, make sure you're quite above the EMA 20. You don't want to be too close to it. Like I say, if I do 1 mini, if you guys are used to these terms, that's 1 ES. For ES is the same as SPY. I'm risking $200, but I want to gain 200. Right in here, this is a chop mess here. This day would have been a little trickier. I think you would have barely won on this day, just kind of depending here, as you can see right here, and then we come tumbling back down. Because as you can see, we're above the EMA 20, so this is where the uptrend goes here. So you hit this, and then you just keep going up. So as you can see right in here, you would have won on this candle. This candle right here, it comes back, tests again, you goes up. This candle comes back, tests again, and you keep going up, and it would have been a very good day. This right here, totally fine. It looked like it was a downtrend, and then it comes back up and does an uptrend. That's totally fine. You can get you're gonna lose a couple, but a lot of these. What I like to do too is once I know the trend is very solid, like right in here. Sometimes I go bigger size on these kind of things. So I would do like 2 minis if I'm doing futures, or if you're doing $1,000 account for options, do $2,000, and you really upsize your gains there. All right in here, I mean, this is very addicting, as you can see. As you can see, the 15-minute candle, we come tumbling down. It's definitely downtrend. This one, I always take the 10 and 20. I don't look at the EMA 5. I have it there. It does help to see a little bit. As you can see, it does reject at that EMA 5. and you get a couple. I like the 10 to be a little more safer. So right here is your entry here, and you just make bank on this one. Right here, it goes down. Retest the 10, and it goes down big time. Retest the 10 here, and it goes down. All right, that one was an awesome day. No losses on that day. Perfect win rate. Yeah, you would have made bank on that day. But you can tell the trend. If you're above the EMA 20, uptrend, down. Below it, downtrend. And the reason why I like this strategy so much because your stop loss is so tight and you can really ride these gains. And like I said, your risk versus reward is the best. A lot of the people I see doing things, they'll take their gains so fast. But my thing is, if you're willing to risk, a 20% stop loss, you got to at least get a 20% gain. You have to. Especially with options, because then the problem with that is if you take one loss and let's say you get a 5% gain, you have to get 4 wins to eliminate one loss. That is not a probable strategy. So a lot of people just relax. If you see green, let it be there. If it goes negative, that's totally fine. Just stick to the whirls, and you'll be fine. Here you can see a clear uptrend. As you can see, we're hitting this. You might say, what is this upper band here? That just means like these are very oversold, overextended. So sometimes I'll take a short up in here, and as you can see, it goes back down here. And you would have made nice little gains here. It comes back again and goes back down. But for the strategy, that's another topic. For the strategy, as you can see, we hit the 10. And we go up. Right in here, we hit the high here, and it gives us another time to get it. And that's why I love the rinse repeat. It comes here, goes up. Comes here, goes up. And you can really keep rinsing, repeating it. Comes here, goes up. And then it comes here, and then this is after hours, but it goes up. All right, very nice day, easy day. No losses should have been on that day. Right in here, we hit this overextension. As you see where you get these corrections. Where these corrections are going to happen are the EMA. So you hit the 5, it goes up. I'm not going to play the 5. I like to be a little more safer. So hits this 10. You would have lost on this 10. Because it comes down to 20. But as you can see, you can play a little bit more bigger size on the 20 if you want to just up it. And as you can see right here, easy day. It comes up here, makes a nice gain here, comes back, make another gain, and then it just stays back and then hits the 20. So you might ask, well, how many times do you want to play the 10 and 20? Well, it's your preference. As you can see, you're bound to break down to the 20. It's bound to happen. You see how you hit the 5 a lot, boop, 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 and then you go down to the 10, and then when you hit the 10, you go down to the 20. So it's really up to you. I like to play, if it hits the 10, I'll probably play it one time, and then I'll wait for the 20. That's how I like to do it. For the 20, I'll take it many times until I take a loss, because I've seen it hit the 20 like 6 times. And you could keep making gains. It's okay to take a loss. Remember, the best traders in the world are not sore losers. If you just accept the fact that you're going to lose on a trade, you're fine. But if you control your risk versus reward, I've showed you plenty of examples where you'll win like 10 times in the day. And then if you take 2 losses, you're still up 8 times. Well, 8 times 20% on an option account is amazing. 20%, 20%, 20%. Let's say 3 times you're up. You made 20%, 20%, 20%. If you're doing just $1,000 account, you're up $600. I'm telling you guys, it's insane. But you gotta remember, have to have a strict stop loss. If you do not have a strict stop loss, and what I've seen for, that's why I say you try to get as close as possible to this EMA 20, and your stop loss is going to be above the EMA 20. Around a 20% stop loss is good for that, and then your 20% gain is going to be down in here. So you can really, my thing is, in a choppy market, you still make money. So here's one last example I'll do, because this is very addicting. I love doing it, and I'm pretty sure you guys are going to do it too. Look at anything, indexes, stocks, and you'll probably love this. All right. So we are below the EMA 20. Starting off here at 945, you can clearly see we're below the EMA 20. What I would have done is I would have taken, let's see right here. I would have taken this, and then I would have made a gain here, as you can see. So right here, I like to take the 10. We went all the way, dropped back down here. We opened up at 575.31. So we opened up, right up in here. Oh, yeah, my bad. Yeah, it's going to be right up in here. So taking this 10 here, went down here, we made a whole new low. way all the way down here, that would have been a nice gain. So you would have taken here, and as you can see, if you taken here, it went all the way down here for a low, would have made gains. This would have been a little dicey as it went a little bit above you if you took it again. But as you can see, we kept making lows here. So here, the 20 just kept getting rejected. So you could have kept scalping this. Here goes down, here go down. But then, I mean, you would have got probably 4 wins. Let's say you lost on this candle. So you would have got a win here. Let's say you got a win here, or lost here as it went here. You would have got a win here as it went down, win here as it went down. So you would have had, quite a bit of wins. And then this right here would have been a true loss here. As you can see, it definitely was going up. But as you can see now, we're above the EMA 20. As this candle right here had a body above the EMA 20. And then right in here, you start retesting those EMAs. So we take a long entry and it goes way up. And then right in here, it tries to go, here. We would have probably lost. I'm not sure if this would have made us a 20% as it, depending on your entry, if you would have got it just below the EMA 20, then yeah, you would have won. But as you can see, this was a chop downtrend. We went down here. We hit this. You would have won on this because I know usually your stop is up here, and then you make massive money on this right here. And as you can see, the downtrend is initiated. And then, yeah, that's it. That one would have been a little harder, but I guarantee you would have been your risk versus reward. You would have had more wins than losses on this day. This was a chop mess day. Most traders would have got wrecked on that day. Yeah, it's just very easy right here. 10, bounce up. Go to the 20, bounce up, 20, bounce up, 20, bounce up. No losses on that day. All right, guys, I hope I made this very clear. If this is not clear enough, I'm willing to help you guys. Definitely join the Discord. I teach these kind of simple strategies. I try to make the most simple strategies by lots of backtests. I spend a lot of time backtesting, spend a lot of time doing these strategies. But if you guys want to join the premium Discord, you're more than welcome to join. I think I offer a lot of content, a lot of strats that actually work in the market, and I try to teach discipline, risk versus reward, and all that. And what I've told you guys, all in this video is exactly how I'm doing it. And I made thousands of dollars doing, this strategy this past week. So I'm very excited to release this. It definitely works. And it just comes down to your risk versus reward. I mean, are you strict enough to establish that, hey, I can lose on a trade. It's totally fine. I'm not going to hold this thing and be stubborn about it. Because when this changes tides, like right in here, it looks like an uptrend, and then it starts going downtrend. So we need to change the sides up. We're in a downtrend now. We need to be taking downtrend things. And that's what the market can do. And that's a choppy environment. It'll act like it's going up, and then it goes down just to fake us out. But yeah, if you want to join the Discord, click the link down below in the YouTube comments below. It'll say join the premium Discord for my alerts and system. When you click that link, it'll take you to this free chat landing page. If you guys want to subscribe, the easiest way to do is just hit day trade alerts right in here, and you'll get access to all of that, and you get to the highest tier. But if you hit server shop up in here, you'll see Day Swing Trading Plus is $12 a month, and that is literally the cheapest you'll probably ever find for this, these kind of strategies. And it's really nice. So $12 a month to subscribe on your computer. It's a flat rate, and you'll get access to all the subscriptions. And I definitely think it's worth it. Swing trading is a different service. It's only $6 a month. You're not going to get a lot of alerts. It's not really for the full-time traders. If you want to be a full-time trader, this right here will definitely do it for you guys. You can do lots of strategies, lots of stuff, and I think you guys can love it. All right, that's a quick video. The video was kind of long, but I wanted to show you plenty of examples of how it works, and this is awesome, guys. Thank you so much for watching. Hope to see you guys in the Discord, and I'll see you guys around, and happy trading, guys. Peace out.